Hey everyone, it's Dr. Woolworth again. Today we're going to be talking about the US tax system and policy trends. Now, I know federal taxation doesn't always sound thrilling at first, but this stuff is incredibly important, and you're going to see how it connects to the decisions you make every year when you're filing your taxes. We're going to be looking at how the system works, who pays what, and how recent debates in Congress could shape the tax world we work in as future professionals. This foundation is going to be important throughout the rest of the course. So, what do we actually mean when we're talking about the federal tax system? It's a progressive system. That means as your income goes up, so does the percentage of your income that you pay in tax. So, in other words, somebody that makes $30,000 isn't taxed the same as somebody who's making 300,000. The tax brackets and marginal tax rates are designed so that higher earners contribute more. Federal taxes are collected primarily through income taxes on individuals and businesses, payroll taxes for programs like Social Security and Medicare, and corporate taxes on companies. The IRS, which stands for the Internal Revenue Service, is an agency that enforces all of this, and it works from the Internal Revenue Code, which is Title 26 of US law. So, who actually pays income taxes? This part usually surprises people. According to Pew Research and the Tax Foundation, the top 1% of earners pay over 40% of all federal income taxes. That's a huge portion coming from a relatively small group. Meanwhile, about 60% of US households owe no federal income tax. That's not because they're doing anything illegal or wrong. It's usually because their income is low enough that the standard deduction and credits wipe out their tax liability. But that doesn't mean they don't pay taxes at all. Most people still pay payroll taxes. Things like Social Security and Medicare are taken out of nearly every paycheck, regardless of your income level. So when you hear people say half the country doesn't pay taxes, that's a bit misleading. They may not owe any federal income tax, but they do contribute in other ways. So, how are our taxes used? Where does all this money go? The biggest pieces of the pie are Social Security and Medicare, which support retired and disabled Americans. Then you've got defense spending, infrastructure, education, health programs, and more. Another large piece? Interest on the national debt. Yes, just the interest. We've borrowed money over time, and we pay interest on those loans just like any other borrower. So taxes don't just fund programs, they also help us keep the government running day to day. Whether we're talking about roads, veteran services, or student aid programs, taxes are behind the scenes supporting it. So, what's going on with taxes right now with our current tax policy debates? One big debate that's happening is should the wealthy pay more? Some proposals include raising the top tax rate or introducing wealth taxes, not just on income, but on the total value of someone's assets. Then there's a child tax credit. In 2021, it was temporarily expanded and made fully refundable. Now, there's discussion about whether that should return and what that means for families in the federal budget. And here's a big one that's looming on the horizon. The 2017 Tax Cuts and Job Acts, otherwise known as the TCJA, many of its provisions, like the lower individual tax brackets, are scheduled to expire in 2025, and it's 2025. Unless Congress acts, a lot of people will see tax increases starting in 2026. So these policy questions, they aren't just theoretical. They're going to impact millions of taxpayers very soon. So, as a future tax professional, what are some trends that you should be watching? So, one of the big ones I just mentioned is in 2025, which is now, we have the sunset of the TCJA we just mentioned. It could dramatically shift the tax landscape for individuals and small businesses. Another big debate, especially for those that live in high tax states such as California, is the debate around the SALT deduction cap. SALT stands for, I mean, I know it's a good flavoring, but state and local taxes. Right now, there's a $10,000 cap on how much you can deduct. And so if you live again in a high tax state like California and New York, it hits those taxpayers especially hard. And lawmakers are divided on whether to raise or eliminate it or keep it the same. And then there's another question regarding tax fairness. Should high income earners and corporations pay more? Are credits and deductions being used in a way that benefits everyone fairly? These are hot topics right now in tax reform proposals, and we'll keep coming back to them throughout this course. All right, so what are some key takeaways? Let's wrap it up. The US uses a progressive tax system, meaning people pay more as they earn more. And not everyone pays federal income tax, but most people do contribute through payroll taxes or other forms. And tax revenue is used to fund critical government programs, including our Social Security, defense, education, and debt payments. And here's what to keep in mind: tax policy is always changing. Sometimes it's due to economics, sometimes it's due to politics, and keeping up with these changes is a big part of being a professional in the tax world. So that's it for now. Be sure to check out the resources that are linked in the module and join the discussion.